All right, everyone, it's Mike. That might help with the sound too, what I just did. Okay. Sorry, I just want to make sure that we have a decent quality of sound here. Okay. So what you should be seeing is an array of 5 different charts. We're not going to really be doing anything with that. This is also a simulated platform, so I can actually put in orders and we can see how they would go in there. Let me make sure that there's nothing in there now. There should not be. Okay, good. Okay, everybody with me. So let's start with the most basic and most easy of things. Okay? So what you want to do is on your main Thinkorswim, which I happen to have a zone chart up on, but you may or may not, it doesn't really matter. You go to the trade tab. Anybody, why don't you throw out a liquid stock? Not too expensive. Just because most stocks, we're not trading. There you go, Tom's first. All right, Apple. And just for fun, let's go out to regular monthly August. Doesn't really matter. This isn't going to change for if you're trading a weekly or monthly, it doesn't matter. Too late, Delane. Next time. Okay. So this should look familiar to you if you're on Thinkorswim. This is essentially an options array. You can set this up for whatever you want. The less amount of information on your trading screen, the better. You do want to have the bid and the ask in there, because whether you're buying or selling an option is going to matter. Okay, so let's look at a limit order. And let's just for fun, let's look at the 455, let's look at the 460 calls. Right now, the bid is $6 bid. They are $6 bid, offered at $6.10. Okay, so first, let's do a market order. Okay, so let's say that we're going to buy these calls. 460 calls, I want to buy them. They just downticked. Okay, so if we want to buy something, we click on the offer, because that is showing us the lowest price that we can buy this at. Market right now is $5.95, $6.05. And then you can see that as soon as you click on either one of these, this is a left click. Anybody else having a problem with the sound? Marco, I'm seeing sound. Okay, thank you. And I'm assuming that the sound is still good. Okay, so like I said, we're going to buy these things at, right now, they're $5.95 at $6.05. So let's be, fair, and let's say, you know what? I want to go in here, and this is just going to default to a 1 lot. That's what I have it defaulted as. I'm going to say I want a 6 limit, and it's a limit order. Or let's do a market order first. What does market order do? You notice that the price went away. Right now it's $5.95, $6. The market says, in the case of a buy at the lowest offer out there in the market right now. We got that, confirm and send. We get the update here. We're going to buy this. This is where we have infinite max profit. We know that our risk is defined by whatever we pay for it. Our buying effect is going to go down by the amount of premium that we invest. And we hit send. And there, I bought it at $5.95 because we downticked just as we were going there. So that's a market order. That was the best offer out there when I put the order in. And you're like, oh, I think I got filled. Where do I find out if I got filled? You go to the monitor, and you see the filled orders here. We did in fact buy it. We opened this position. This is not a closing position. Regular August expiration. What's the strike? Call or put. What was the price that were filled? In the order type, we put in a market order. Anybody ever see a market order come out in either of our rooms? Exactly, Eric. It's not necessarily bad prices, but you're letting somebody else determine where you're getting in. Speaker icon. Obviously, I had to type that out because if you can't hear me, you can't listen to my ramblings. Okay. So now we know that this is what we have on, and we'll see that this will flow through into your position statement. Right now in Apple, I'm long one of these, and the mark now is 582.5. Gone down a little bit. Right, if we got in at 595, that's 12.5 cents. So the underlying has gone down approximately 20 cents since we got in. That's a market order. You'll never get a market order. I don't want to say never. The only time I can ever remember Scott and I putting out a market order was when something was going so well for us that it didn't, the markets were wide and we didn't really know where everything was, but it was like, hey, this thing is an absolute home run. Don't don't screw yourself by squeezing the last couple cents out of this thing. That's very, very rare. I'm trying to remember the last time I've seen that. But that's a market order. Okay, so this is, like I said, this is a simulated platform, so we don't have to worry about any sort of real risk. Okay, sticking with Apple, what is a market order then? Well, we go back to our chart, trade. Same strike, 460 calls. They're 560 bid at 570. I want to do a limit order. The price is limited to whatever I say, or better. So if I put a 570 bid on a limit and it's offered at 555, I'm going to get filled at 555 if it is in fact offered there now. Right now they're 95 bid at 710. Okay, so I'm going to put in a 695 bid, 590. What the heck? Oh yeah, 460 calls we're looking at. Sorry. They're 550 bid at 565. So let's put in a 560 bid. Buying one, we're going to get a confirm here. We're going to buy one of these. This is where the break even is priced. We have infinite potential to the upside. It's going to cost us a max loss of whatever we pay in premium. And then it's going to have the buying power effect and things like that. So we send this. So I put in a 560 offer or bid, and it's 50 bid at 60. It is 55.60. I just paid 60 for it. What did I do? Let's go look here. I actually paid 555. So even though I put in the 560 bid, somebody out there was offering 555. So I got it a nickel cheaper than what I was willing to pay. Everybody understand what the difference between a limit and a market order is? Okay, any questions before we move on? And so you will, basically on entries, you will always see a limit order. You see it on the emails and everything else that comes out. For a debit of 560 or better, or lower, in the case of buying a call, or buying anything for that is. Thank you, David. Remember, guys, I do have to, we're getting a lot of questions that, I consider to be, very basic, but that doesn't mean anything because I've been doing this forever. Somebody who's just new at this, Sometimes 2 plus 2 equals 4 is a completely different concept. Try to teach that to an 18-month-old. Come on, 2 plus 2 is 4. They can barely stand up. Okay, so that is a limit versus a market order. Okay. Now let's go back to our trading tab and let's work on a stop order. Okay, so we know that we bought these first ones, we bought them at $5.95. Well, let's say, okay, you know what? I'm going to put a stop out there so I can manage my risk. So what you do is you go up to your filled orders, you right click, you say create opposite order. That's going to populate down here. So now it's exactly what I entered except the other side. Then you go over to the order. I want this to be a stop limit. Now, there are 3 different ways that you can set your stop in Thinkorswim. There's the standard, which I believe is when the option prints that price or lower, it triggers your stop. The ask is when the ask is at your trigger price or lower, and mark is when the theoretical between the bid and the ask is lower than your trigger price. So I use mark. Maybe there's arguments to the other effect. Okay, so I have my stop in here. Where are these things right now? These 60 calls are 60 bid at 70, 560 bid at 570. So let's put in my stop limit. So my limit price is going to be 870. That's where I want to set it. And it is going to trigger if we get below, excuse me, not 870, 570. And my stop price, or my stop trigger, I'm going to have it be at 560. Okay? Well, let's put it in at 570 as well. So we're going to hit this. Stop limit. Okay, so now we can go to our monitor tab. Stop limit. So this means that I'm trying to sell this thing at a 570 limit order. And it triggered because we got below the mark of 570. So that's why it says working. So we're only going to get filled on this if we can sell 570s or better. We are defining that price. So we are guaranteed a price, but we're not guaranteed a fill. If Apple were to continue to go down, well, we're just gonna be working this 570 limit up above. It may never get filled. It might go to 0. Okay, and right now the mark is 560. Well, you're like, man, I really want to get out of this. All right, well then just go to cancel and replace order and say, you know what, my stop limit is 555, and my stop trigger is if the mark gets to at or below 570. So now I'm going to put this in here. We're going to go to our tab, and we're going to see that I sold this thing out at 560. Let's go to our monitor tab. So I bought the 460 call at 555, and I stopped myself out for 560. So I defined the limit and I defined the trigger. Guaranteed the price, not guaranteed a fill. I don't use these type of stops very often. This is just a matter, neither is right or wrong. Each has their own risks associated with it. All right, anybody have any questions there? Before we go to a regular stop order. All right, I'm not seeing any questions here. All right, so now let's go and do a stop order. Well, Riza, this is recorded. So we can't go over we're going to have a 5-hour long video if I have to go over each thing twice. Watch the video and then come back with your questions for sure. Yes, like I said, there's nothing wrong with it, but you're not guaranteed to fill. Okay, so let's go to this first one that we bought at $5.95. You know what? I'm going to go here, right click again, and I'm going to say create opposite order. Now down here, I am going to just go stop. I'm going to define that by mark again. And you could, in your head, you can call a stop a market stop. So this is saying, if we get to my stop trigger price where the mark is at or below $5.95, which it is right now, it's $5.50 bid at $5.60. I haven't done it yet, Stephen. I'm making it right now. You will see, it'll be posted. I have not titled this yet. Okay, so this is going to say, hey, when the mark gets to, and I'm going to say that when the mark gets to $5.50, this turns into a market order. Hit the bid is what this is saying. Or better, of course, if you can get better. But the machine's going to sell the highest bidded price at that point. So let's put this in here. Right now, the market in the 60 calls is 55 bid at 65. So we know that this is going to get hit because we are below, the mark is below 550. Going to do that. I'm going to hit send, and we're going to see oh wait, I'm sorry. My stop order is if it gets to if the market's to 550 or lower. Hang on. So let's go to 570. If the market's to 570 or lower, which it should be. Let's go 65 just to make sure. 565, send that, and that triggered. We can see that, or no, it's sitting right there because the mark is 567.5. Now it just went to 570. All right, so let's check, you know, since this is we're not really working this order for real. We're going to go here, we're going to go cancel replace, and I'm going to make this 575 is my trigger, so that should trigger right away. Oh, I sold it at 575 because the market went to 460. They're 570 bid at 80, I got out at mid-market. Let's go check what we did. I sold this at 575, and it tells you what I did. It was a stop. Always go back when you're done and make sure that you have the position on that you want to have. Right here, I want zeros, and I have zeros. So we can see here, we bought one, we bought another one, we sold that out on a stop, we sold this puppy out on a stop limit. Everybody understand what the difference between those two are now? And I have zero position on, which is good. Okay, that's the most basic thing that we have here. So we've gone over, sorry, I was taking a little water there. So we've gone over market order, limit order, stop limit, and stop order. Okay, now the next one is an OCO. There's OCO and also a trigger entry. So let's go OCO. Let's get a position on here in Apple. It doesn't really matter. I'm going to buy the 445 calls, and I'm going to put a limit order in at 110. It's going to give me a fill because it's offered at 1105. And there we go. Okay, so I just got in at 1105 and I got in on a limit order. Okay, now this works for spreads. I wouldn't necessarily put a spread order out there as a stop. I would monitor where the price is, because given, other than your most liquid stocks like SPY, Facebook, Apple, Qs to some extent, you could get some significant slippage when you start doing spreads. You could get some significant slippage when you start doing one-legged options. So you got to be careful that you're not just throwing yourself into, hey, the market on this call is no bid at $2, which makes the mark $1. Even though we know it's better bid than that and it's better offered than that, but that's what's displayed. And that's where you're going to get filled. So be careful when you're dealing with anything that is other than the top-notch liquid stuff that we can trade. I would be looking at that with a slant that there's a good chance that I could trigger a stop that I didn't want to. Okay, so now this happens all the time in STO. You're most likely not going to see this type of thing with a spread coming out. You'll see stop orders, but you won't see OCOs very often. Scott likes to, wait for it to get close to or at the price he wants to get out, then he tells you to get out. But with trading short-term options, I want the risk out there, and I also want my offer out there. Okay, so we see that we bought this call. We bought the 445 calls. We bought them at 11:05, and the mark is Apple continues to go down. It's at 1075. Okay, well you say, you know what? I want to have a stop in there, and I want to have a target in there. For whatever reason, I'm going to be watching it, but maybe I'm doing other things, or maybe I have to go walk the dog, or I have to go pick up my daughter from the library, whatever it is. So again, we can go from here. We can go right to. We can either go to our fill and say create opposite order, or we can go down here and right click on the underlying and say create closing order, and it gives you a little bit of an update here. Sell one Apple at 1075. That's where it's trading right now. So I'm going to put that in there. Okay, so now I have my limit there, but I don't want to sell it out at 1075. We bought it at 1095. Let's sell it out at $12. Arbitrary. In the STO room, I'll tell you what your exact marks are, where to offer it out and where to stop yourself out. Okay, now here comes the OCO. What does OCO stand for? One cancels other. I think David's, there you go. OCO, Tom. Okay, so how do we do that? So I want to have a limit order and I want to have a stop order out there. I don't want to have to enter it twice, and I don't want one of those sides to fill me and leave that stop order out there. So let's say that we sold it out at $12 and I have a stop order out there to sell it at $10. Well, we got out at 12, but that stop order is still out there, and I completely forgot that, I was done with Apple in my head, but the platform wasn't done with it because it has a stop order out there. Most likely because it's short premium, it would probably give you an error, but who knows? If you have enough permissions and enough cash in your account, it could happen. Okay, so right now we have a limit. We go down here to the right-hand corner where it says single order. Single order down here in the left-hand corner. Let me make this yellow. All right? We click on that, left click, and now we get all these other things. OCO is what you want. So now we have an OCO, an advanced order. We have our limit out there. Now anywhere in here, in this order, right click and say create duplicate order. So now I have two of these out there. But the first one I want to be a limit, the other one I want to be a stop. Well, I'm working an offer out there at 12, and I want to stop myself out. If this thing starts trading $10, I'm going to take my 95-cent loss and run away. Live to trade another day. So we have that in here. It's defined, it's a stop, so it's a limit order. I'm okay with that in Apple. Most of the stuff all the stuff that we trade in STO for day trading is going to have a relatively low bid ask, because I don't want to give up 15 cents on the way in and 15 cents on the way out when you're trying to make 70 cents. You give up almost half your premium trying to, getting slipped on bid ask. Okay, so now we go here, gives you a summary of what is happening here, and you go send. Always, after you do this, let's make sure that I put it in correctly and I'm working what I think I want to work. Again, go to Monitor tab. The Monitor tab is saying, okay, I have a $12 limit out there, and this thing is trading between 11 and 11.05. So obviously my $12 limit is not going to get hit. I also have this stop order out there. This stop order, when and if it is triggered, it's based on the mark. If the mark gets to $10 or lower, that turns into a market order sell. And so you can see over here, this says wait stop. Means that it has the order, but this thing is trading 10.85 right now. So a $10 stop is not going to get hit. Okay, so OCO is typically used after you get your initial fill. And then you can change this. If this thing starts working, don't ever lower your stop. That kind of defeats the purpose of a stop. You're saying, hey, this is my pain threshold. If it gets down here, I'm out. Not, ooh, I'm close to getting stopped out. I better move my stop down. Another good way to develop bad habits and lose money. So those are typically done after we get our initial fill. And like I said, we can move this. We can say, you know what? I don't want it to be $10. Let's just pretend that this thing is trading like $11.50. You know what? I'm going to cancel and replace this. I'm going to take some risk off the table. I'm going to go to a $10.50 stop. Confirm that. Okay, same thing, except I have a different stop level. Now it's, if we get to 10.50 in the mark or lower, it's trading 10.85, now trading 10.75, I don't expect to get hit. You can also turn it into a trailing stop. Same thing, right click anywhere in here, cancel and replace the order. Well, instead of a regular stop, I want to do a trailing stop, which this means I have it set for 50 cents right now. Take the highest price that it's traded since I put this in, subtract 50 from it, that's my trailing stop. Basing it on the mark, stay trade, same thing with everything else. Now we'll go and look at our Monitor tab. So I have a trailing stop in here, TR. I usually say TS in the room, which makes sense, trailing stop. TR is just the first two letters, it doesn't matter. But right now, so since I put this in, so 95, this traded as high as 11.05 apparently, since I put this in. So this stop is only going to go up, so now it just jumped 10 cents. As this price here moves up, it is constantly going to say the highest that this price is traded, take 50 cents off of that, that's my new stop. So theoretically, you can get rid of this limit and just let this thing run. And it's always going to move that stop up with you as it makes higher and higher moves. So this looks like it is traded 11.10. Right now it's trading 11.12 half because 10.65, 50 under that is 11.05, excuse me. 11.15. It's traded 11.15 since we put this on. No, 11.05. No, never mind. Thinking and not doing the right math. Doesn't matter. Everybody understand how this is going to trail you up. As it stands now, if this trades 10.65 on the mark, below that, it's going to turn into a market order. If it trades $12, we're out. And if it does trade $12, here, let's change this to, I'm going to sell this out. We bought it at 10.95. I'm going to sell it out at 11.10. Cancel and replace the order. I'm going to take my 15 cents, 11.10, tab out of that to make sure, and now we can see that I'm working an 11.10 limit. Well, let's just go to, let's see if we can get ourselves filled. Let's just go to an 11 or 10.95. I'm going to scratch this trade. I don't like how it's setting up, whatever my reasons are. Actually, hang on here. I think I clicked on the wrong one. No, I didn't. Create. So I'm going to create, I'm going to cancel and replace, and I'm going to just get out of this thing. I'm going to say, you know what? 1080. Now we go to my monitor tab, and we can see that our filled orders, I bought it at 11.05, I sold it at 11.90. I'm working nothing in Apple, and you can see I have no working orders. It canceled that stop order, so I don't have to worry about getting stopped after I sold this thing out. There you go. David, something you learned today that pays for itself right there. Okay, everybody understand that, and there's one more concept that I want to work. Like I said, OCOs for me are used after we have our initial fill and where I want to define my risk, I want to define my reward, and then I can get up and walk away from this. I don't encourage anybody to stay away with orders out there, but I know that sometimes, hey, you know, somebody's banging on my front door, or the dog obviously needs to go out, or my daughter really needs me to come get her, whatever the reason is. Okay, the last one that we're going to do is a trigger. And these triggers are done with me. They are done with an order that I'm not yet filled on. I want to buy this thing, and I want to immediately define my risk. You could do an immediately define your reward, but I find that those get kicked out by Thinkorswim for whatever reason. Okay, so let's go to the 460 calls again. I'm going to buy these. I'm going to buy this, and then I'm going to go back over to this lower left-hand corner. Same thing with the advanced order. And I'm going to click it, and I'm going to go first triggers all. So now down here, actually, let's just get rid of this here. Okay, again, 5.95 bid at $6. I'm going to go here. I want to delete that. Making sure I don't have any position. I don't. So here we're going to go up to these 460 calls. And I'm going to go first triggers all. So I want to put in a $6 limit bid. And at the same time, if this first one triggers, I want to sell, I want to set a stop out there, so selling one. I want to stop myself out, so we go here, put out a stop at 550. So if I get filled at $6, immediately it's going to turn into a 550 stop. Confirm and send. Okay, so I bought my calls at 580. And we can see that immediately when I put in the 580, it went to a 550 stop. Now I can just move and manipulate this and say, you know what, cancel and replace this order. I want to go to an OCO. I want to create a duplicate order. This is a limit. And I want to sell this thing out at $6.10 for whatever reason. Confirm, yes. And now we can go out here. It'll cancel my other signal. Now I have an OCO, and you can tell that something is an OCO. You can see, or that they are tied together you can see over here on the left, you can see that link. That's meaning that these orders are linked together. So we can see that I'm already in. I bought these things at 580. I'm working to sell them out at 610, and I have a 550 stop. Now once we're in here, I can, you know what? I want to do a trailing stop. Cancel and replace the order. Same thing. I want to go to a trailing stop, and I want to do a 50-cent trailing stop. That will keep your offer out there that you had before at 610, but now I put a trailing stop of 50 cents here. It was trading 580 when I got in, so 580 minus 50, 530 is my stop. Okay. All right, any questions on that? That's about all I had for this. This is a little bit less than, let's see, Mike, if you have time, please explain BTO, buy to open, limit order, OCO. Yeah, that's a conditional order. And actually, I believe we had a webinar on that. Let me see if I can get that link. I believe we had a webinar on that. That is a little bit different. That's a conditional order. And they can be tricky. Stay away from that until you're really, really good at this and you know exactly how Thinkorswim is going to treat these orders. Let's stay away from that right now, but let me get that recording if we have indeed disseminated that yet. I'm writing myself a note so I know to talk to Scott about that after we get off here. Okay, any questions? If not, I'm gonna get this video going. I will get it out in here. I'll put it in STO. I'll put it on the campus. Maybe I'll even try and put together a video. We'll see if we can do that. I think I have to put it up on YouTube to get it to send properly. But there's been sound the entire time, even if it's on your end. Okay, maybe, let's see. Rod says, maybe do mouse actions a bit slower as not everything is fully rendered in the process. Okay, I will try. Hopefully it looks a little bit better in the video than it does on the projection, but I don't know. Because I'm projecting the screen, I'm not projecting Omnovia. But I do know that there is that lag. I do, and that's why I was using arrows and things like that. I think I can use arrows here too. I think I have to zoom it. I have to run this each time. Okay. In here. Okay, well, neither here nor there now. But we'll work on that, see how that comes off in the video. All right, if there's no questions, I'm going to get this out. This is about 40 minutes long. It'll take me about a half an hour to upload. All right, thanks again for stopping by. If I don't talk to you, have a great weekend. We'll be doing this on Monday. You guys can always get in touch with me. Trading.com. Come up with some ideas. Shoot me an email. We'll see what we can do with it on Monday. Otherwise, I got to guess. You may or may not like the topic, I guess. I'm going to put the recording in STO as well, Pat. All right. Everybody, I will be back in SEO in just a couple minutes. Hopefully we get a little bit of trade going into the last hour of the week of trade. Have a great weekend. All right, bye everybody.